Welcome back to Tech in 2 talking about AI market movers. I'm your intrepid host Alex, and today I am with our guest, Dr. Reed. Today, we're diving into the heart of the U.S. economy and the powerful, yet potentially precarious, role of artificial intelligence. A recent news article asks a critical question. AI investments are pulling the U.S. economy forward. Will it continue? With me to explore this is our market analyst, Dr. Evelyn Reed. Welcome.
Thanks for having me. It's a fascinating time for AI, and its economic impact is undeniable.
The article highlights that despite other economic headwinds, the U.S. economy is showing stability, largely thanks to the AI industry. George Saravilos of Deutsche Bank even suggested that without tech-related spending, the U.S. might be in a recession. It seems AI is a significant economic driver right now.
Absolutely. We're seeing hundreds of billions invested in AI infrastructure and development. The Stargate program, a joint venture between Oracle, OpenAI, and SoftBank, just brought a massive data center online in Texas. NVIDIA and Microsoft have both hit $4 trillion market values, with AI being a key factor.
So, this massive investment and growth are certainly positive for the economy. But the article also touches on a familiar concern, the fear of an AI bubble similar to the dot-com era.
That's a valid concern. Campbell Harvey, a professor of finance at Duke University, points out that just 7 tech companies heavily involved in AI are driving most of the growth in the S&P 500. While there's real revenue behind building these data centers, the concentration of growth is a red flag for some.
And it's not just the concentration. The article mentions that AI adoption rates are starting to slow. Carl Fry from Oxford University notes that early AI adopters are having second thoughts, narrowing projects to those with clear ROI.
Precisely. Companies like IBM and Klarna, which initially replaced customer service jobs with AI, are now reversing course. They found that technology wasn't as effective as human workers. An MIT report even found that 95% of companies adopting AI aren't seeing significant revenue acceleration.
That's a stark statistic. It suggests that the hype might be outpacing the practical utility for many businesses. Cal Newport of Georgetown University emphasizes that integrating generative AI into workflows is harder than anticipated, and the underlying models are often too unreliable for full automation.
Indeed. The idea of AI rapidly taking jobs hasn't materialized as quickly as some predicted. A Stanford study did find a 13% decrease in entry-level jobs in customer service, accounting, and software 22 due to AI adoption, but the overall picture is more nuanced.
So, while AI is undoubtedly boosting the economy now, there's a growing question about its long-term sustainability and whether it will deliver the broad-based productivity boost our economies need. The risk isn't just a financial bust, but a failure to deliver on its promise.
Exactly. The dot-com bubble left behind valuable infrastructure, but the question for AI is whether it will do the same, or if the current investments will lead to a less productive outcome if the technology doesn't mature as expected.
A lot to consider as AI continues to evolve. That's all the time we have for today. Thanks for your insightful analysis, Dr. Evelyn Reed.
My pleasure.